All right, looking at your trade face-to-face, your market face-to-face, I'm going to just use case study of Bitcoin and gold. So gold are one of the major things I trade most of the time. Looking at your trade face-to-face, what do I actually do daily? My routine to trade. And of course, there's a need for me to check if there are fundamentals for the day. Just my basic routine. Just follow me. And you want to enjoy this type of training and all of that, you come into our ecosystem, Plan B Express. We're going to give you very fantastic support system if you're ready to follow us and be part of Plan B Express community. And of course, I have another insider group, I call it inner trading group, as FOREX, Felix FOREX inner group, right? So we're having today by 8 p.m. Nigerian local time called FMOC meeting minute. And of course, this actually twists market around. Now, if you look at it again, you have AUD. So AUD and by 8 a.m. So AUD had happened and now maintaining the same. There may not be so much difference in the AUD character. So GBP, so you have to see CPI of GBP. If you trade anything currency that has to do with GBP, there's a need for you to pay attention. All right, so now I go to my chart where you are going to compute data analysis. Now, look at it. I said, first of all, what you want to establish, take note, everybody, what you want to establish is called what we call structural bias. Okay. Now, I have advanced way of determining structural bias. I'm not going to go into that detail. This is just for basics. So you want to understand structural bias or what you call trend. Okay. So structural bias or structural and trend bias. So meaning just to know where is the trend going to. Next you want to have is called area of interest or point of interest. So whichever thing they call it. Then you can do your top-down analysis, top-down review. And then entry confirmation. Entry confirmations, then risk and trade management. Risk and trade management. But understand that market is depending on three major things: liquidity area, liquidity sweep, and price action. So that means everything you are doing is just basically around price action. So let's quickly go. Now, what is this trend? Now, overall trend of this market is uptrend. But so there are trend in a trend, so you have to understand. So basically, where should I go? If I still want to trace this market back, no, I don't want to go too far. I want to just go within a region. If I want to go within a region, probably I'm looking at this daily time frame. So I want to start, let's take a region. This is a region I want to take. I want to take a region here. From this region and to this region. Okay? So this is going to be my daily range. Do you understand? Okay. Why? I swept a sell side liquidity and a buy side liquidity. All right. So let's quickly go. So what I'm going to go to do, probably I do something very importantly. Let's go here. Okay. Let's go. Can have this. So that means I'm supposed to be seeing more of buying opportunity if all things being equal. Yes, supposed to be seeing buying opportunity if all things being equal. But so let's look at it. Now, we're looking at this market is an uptrend. Why? Okay, fine. This is a low, right? And then this is a high. So I want to find my point of interest. I've seen that the market is an uptrend. So I want to find my point of interest. So this is a low, this is a high, and then I have a shift in market structure, and then this is a break of structure. Now, this is top-down analysis. I'm not going detail about this. I'm just going on peripheral. So this is a low, and this is a higher low, and this is a high, and this is a higher high. Make a lot of sense, right? So this is a recent structural break. Now, so what I'm going to have, it's called origin of that structure being broken, which is here. And now we had it already mitigated, if I'm not mistaken, on daily time frame. So if that's the case, we have this. So this structure has been mitigated. So we have the market up here and then coming down. Now, where will I do? What will I do from here? How can I take a trade right now? I cannot take a trade. Do you understand? I cannot take a trade. So right now, so what am I supposed to do? It's very simple. I'm going to go down to a lower time frame where I may be able to see more language spoken. All right. So I'm going to go to 4 hours. Follow me. I'm going to go to 4 hours. So here is 4 hours. What's 4 hours giving to me? So 4 hours too is confusing me, right? Okay. So what I'm going to do? Now, 4 hours is confusing me equally. So I'm going to go back to this. So let me just change this one to a different color and make it even thicker. So this is my daily range. Now, I'm not propounding the theory for you. There are more to deal about that. That's more advanced. All right, so I have this. So this structure, we have this structure. This is a low. And then so on 1 hour, on 4 hours, so if I'm going to take off this, so you're going to have something like this. So just understand my top-down analysis. Okay, return back to where you come from. All right, this is a low. Yeah. So this is a low. So this is a break of structure coming from that up. And then this is a market structure shift. And then we have the return to the origin and make a lot of sense here, all the whole body here. So here, I'm going to have this way. So this is a break of structure entirely. So we have it here already first, a break of structure. And then after this break of structure, we have something return. And that was a massive and quality one. And now we have a new break of structure, which rallied to this point quickly. Now, so you are doing, what you're doing is top-down analysis. And now I'll also tell us to understand that market is about buy and sell. So here we have on this one daily time frame had been mitigated. That's what it means. So 4 hours, and we have another mitigation to be done, which has to do with this. And they were beautifully done. So this is 4 hours, beautifully done. Make a lot of sense, right? And then we have another break of structure to the top, which brought about this selling. And of course, you know this selling is supposed to occur. How? It's supposed to occur now because we have something left behind here to be grabbed. And so if that's the case, so we have a break of structure. So fantastically, then we have a change of character over here, which make a lot of sense, and then give us this point as an origin. Just pay attention. It's a very simple cheat code. And so it was beautifully mitigated, and then you should have a sell. And this sell was a very fantastic one. We have another break of structure up of that selling here. Make a lot of sense, right? Good. So if that's the case, this one have finished its job. Then we have this man still retaining its position as Lieutenant Colonel. So these are point of interest I'm marking. Now, how? This is a fantastic point of interest. Sometime, now it created a very big fair value gap from here to here ordinarily. So you're going to find here to this point. Do you get it? Here to this point is a fair value gap, a very fairly large enough fair value gap. So I can say coming to this point, and then, so don't mind me, I'm just doing something that you may not understand. So, but you have a fair value gap over there. And then, of course, your point of interest that the market need to return back to. That's exactly what is happening right now, right? Okay, so then we have this. This is a break of structure. And then we have this other block that was left untouched when the market traveled up here. And so what actually happened there, here, was another block that was not mitigated. But what really happened? The market broke structure here. Makes sense. It broke the structure here. and now and invalidate this other block, which ought to be respected, but was not respected, and the market traveled down as massive as possible, and then turn it to a breaker block. So a breaker block, now, of course, that can turn to resistance, and that can turn another area of interest that the market need to actually travel to. All right, so let's take it off now, but you understand this. If you want to know more detail about this, of course, you want to come to Plan B Express, subscribe. We'll teach you this basic without stress, okay? Now, so clearly speaking, you have a break of structure. This is another break of structure. Make a lot of sense, right? And now, so if this is another break of structure, then we have so much massive area of interest that's still colliding. We have this point, and then we have all of those, then back to this, still traveling back to this um, fair value gap, and then unmitigated order block. So here has been mitigated. So you should be going up, and that's your own dimension. But inside that, you can always say buy and sell. All right. So let's quickly go to 1 hour. Some go to 2 hours. I don't travel too much that way so that we can get ourselves as much as possible. Now, internally, on your 1 hour time frame, you have a break of structure down here, which make a lot of sense. Does that make sense? Yeah, it does. So you have a break of structure here, and then you have another one there, very tiny down here. Okay, so I'm not going to go to detail about that. You have a tiny one here, and then you have a break of structure, that is market structure shift over here, right? You probably may not see that. So that means we have this. So, but going by a larger form of it, you are going to have this as the major external high, and then this was taken out, and then this traveled, and we have a shift in market structure. Now, of course, after the shift, something happened quickly. This happened quickly. And then we tap into the market. So this is already a mitigated order block. So this can turn to a kind of support. All right. So this can turn to a kind of support, or what we call a demand zone, right? So this has been mitigated. And so whichever way you've seen it. So, but look at it here to this point was mitigated. That can be a support. So does that mean market cannot travel back to it? Can travel back to it because it's not a support, but at the same time, a demand zone, right? Because this is an impulsive move from there and all of that. So quickly, let's go back to 30 minutes. I'm going to go to 30 minutes quickly. Now, if you go to 30 minutes, you're going to find maybe more refined of the aspect of you know, the what you just refined now. Here, you have this break of structure here. Okay, you have this high, and then you have another break of structure here. Then you have a high here. So going to 30 minutes, you're going to find something like this. Here is a high, and then here is a break of structure. You can just find it down here. Makes sense? Now, this was not mitigated on 30 minutes, so that's not an issue. You're just refining where you can find some entry. Then you have this break of structure, and then this was mitigated. Makes a lot of sense. Now you have this high. So let's take a this high. So this high was actually broken, tiny, but of course, when I tell you the body of the candle need to break if it's a lower time frame, like 5 minutes, 15 minutes. But let's go. Now you have this and the broken, and then you have this probably here that was mitigated, right, on 30 minutes. Now, quickly, let's go to 15 minutes, which are major benchmark of your market activities. Very, very simple. Now, there's something very unique you need to find here. Might be very cumbersome for you to work with. Quickly look at it. You have to look at the market here. Here is higher. So there is a low. You may not see it properly, but I think so. Let me expand it. Can you see that? So it's actually higher. Okay, makes sense. All right, so here is higher. And now we have a move of the market as absolute as possible. Here you have this. Here you have this. So this was caused this major move. Now the market returned back here, created a low. Now this is a low here. So which is an internal low, so this one. And now we have a high here. So what brought about this low? So let's concentrate on this guy. This is the guy that brought about this low. So ordinarily you can see this the origin of the low. Makes sense. Then this is exactly MSS. Exactly what? MSS. So if it's an MSS, so you have another low here. Now, but remember something very unique happened here. As this break happened, that's an MSS. We're supposed to travel down, yes, haven't swept this place. But this tip point of an origin, are you getting now? Now it's a bit complex now. So you have an origin there. Here was a stop hunt. Hunted this high and then stop down. Now, but as a scalper, and we have key levels or psychological level, we trade 50 pips when market is squeezing. We trade how many pips? 50 to 100 pips on gold when market is squeezing. So we had a kind of psychological lines that we make to trade from one point to the other. So, but this market is actually dangerous, right? It's only squeeze trader that could find this kind of a trade interesting. So they could scalp 50 pips without wasting time. I can tell you that. Now, how would they do that? Now, coming down to this point now to mitigate this area, all right? It shows that they could have find an entry here, but now this is what we're looking for. For us to rally up, you have to break the structure entirely, and this will not turn to just a market break of structure because this has not been broken properly, and then you have this overlap of this market. So here, remember where we're saying we're going to up here, 4136, and then to the 4166. Does that make sense? I think it's making sense, right? Makes sense. Good. So now, if you want to get more dialing, because I told you that coming down to this point, you probably will find an entry. Now, I'll probably come back to 5 minutes. Now, if I come back to 5 minutes, I enter market with different confirmation. So I entered the market with different confirmation. And what are my confirmation? No, this is a market structure shift. Now, this is my confirmation. This market actually bully up to this, which is like a stop hunt. So coming down to 5 minutes is for me, all right, is for me to actually target up here because I find a mitigation into this point, and then this is my market entry. Now, we that trade that 50 pips kind of ideology, my stop loss, remember, is going to be below this guy. So my stop loss is below this wick here. All right. So my take profits is 1:2 risk reward. Then it's going to be this. Good. That's where my take profit is going to be. That's I'm risking how many pips? 53 pips to make 109 pips, which is amazing. All right. So what's going to happen? So you have a resistance ahead of this point, which is like a kind of sell side, a buy side liquidity. So if that is taken off, then I'm expecting the market to actually rally as much as possible. Don't worry. I know it's looking complex to you that how do we do this? Now, so because imagine I will have sold the market equally. I think I've sold the market equally today. Yes, I bought here. I bought the same market here. Look at my entry. This is 5 minutes, right? So even 15 minutes, this is my entry. And there's a factor here that make me find an entry here. You probably wouldn't understand. Now, this is my entry. Now, even if I find an entry here, there's something again that's still happening there that you may not really understand how I get my entry here, but that was my entry confirmation. And of course, when I take an entry, I want to take at least, that's what we call ATR. I use ATR to actually determine my stop loss so that it will not be stopped out. But I like sniper entry. Sometimes you can go to 3 minutes and be able to see it as fast as possible so that I can reduce my entry or stop loss. So look at it. My entry will have been here, right? then my stop loss will be a little bit reduced as much as possible, because here is my entry, going to 3 minutes sometime, or going to 1 minute sometime. So my stop loss will be here. So that's about 29 pips. And so my 1:2 risk reward will have been here. All right. That's about how many pips? That's about 60 pips. So if I'm targeting this high, so that's going to be how many pips? 80 pips. I'm targeting this high, that's going to be 130 pips. So look at it now, going back to 1 minute. I don't trade in 1 minute. I refine market to 1 minute. So you have to understand that. I don't trade in 1 minute, but I refine market to 1 minute. So if that's the case, if I come back to my 1 minute ordinary here, now I still look for my entry. Perhaps you probably wouldn't know how my entry is done. So there are different fashions I use in taking entry to my 1 minute over here. So, but coming back to 3 minute, sometimes I go to 2 minute, but if you don't have a premium account, you can use 2 minute. There are minutes you cannot do. There are, timing you cannot do on TradingView if you don't have a premium account. Okay. So now, so if you look at it on 3 minutes, I will have find an entry as early as possible, and then targeting up or 1:2 risk reward, and then we're good. So this what it means is that, okay, what should I do now? Know the market. So the market is actually crazy right now. So unless you break out of this point, remember the ultimate direction is this. So you're going to wait to see what the market's going to do. Perhaps all on X, if we do all of this abracadabra and then take out this low, then that means we'll be going back into this support or sweeping all of this liquidity down here. And I think this was mitigated already. And so you should be finding a buying, as it were. But I told you the market's about buying and selling. And gold has so much volume. So imagine if I had entered the market here and targeting 1:2 risk reward, then I'm still good into the market. Here, ladies and gentlemen, my stop loss here, below here, and then 1:2 risk reward down here. So if I'm targeting here, that's going to be 1 ratio. How many reward? That's going to be 1:5 point something risk reward. And that's losing 27 pips to make 150 pips. And I told you there are factors, there are stuff we use to actually do this. So this is good. So take note of it, ladies and gentlemen. Now, if I go to Bitcoin, so let's quickly go to Bitcoin. And then so let me go to higher time frame quickly. And I go to Bitcoin, so on daily time frame. That's how I do my market analysis. Very simple. If you want to learn more about it, you come into Plan B Express, subscribe, not even to the biggest aspect. I've told people in our ecosystem that go Bitcoin, it's crashing and we're going to 70 something thousand dollars. And that is going to play out, and it's playing out gradually. Okay. Right. So, okay, maybe I was teaching something, FEG, Fibonacci level, power of 3, CRT, engulfing, right? Time range, and MSS or change of structure. All right, so let's quickly go. There's something happened on Bitcoin, and that's what's happening right now. Okay, on a higher time frame, Bitcoin had swept what we call a buy-side liquidity. Okay. Right? So it has swept what we call buy-side liquidity, which make a lot of sense. So gold is a buy, right? You have seen that how it's buying now. And so first of all, it took out this. So this is a sell side liquidity, all right, and a buy side liquidity. So if that happens, so there are things we are doing here, let's like a dealing range, but I'm going to go to detail about dealing range, okay? So how do I go about it? First, buy, second, sell. And then if that has happened, you are having a kind of market price reset. So we're going to have a total reset in the market, which was happening. And then we kept having part of 3 back to back. You see that? Part of 3, part of 3, part of 3, part of 3. Now, so I'm not going to go too much detail, because one of the lovely things I love in Bitcoin, it answers very, very easily, okay? Or it answered very, very easily into like fib level, fib retracement, both on daily time frame and on 4 hours and all of that. So if we're going down prospectively, now I go to 4 hours. When I saw on 4 hours, yesterday I bought Bitcoin, and you asked me, Felix, why do you bought Bitcoin? Now look at it. The market, of course, is downtrend. So let me not go to up here, but I go all of those points. Now, this is 4 hours on Bitcoin. Make a lot of sense. And this was a break of structure on Bitcoin. Here we have a break of structure on Bitcoin. And then here we have another break of structure on Bitcoin yesterday. So if that was happened, I use my fib retracement level to calculate where my entry should be. So I got my entry. So on standard setting, what we normally have. So let's go this way. So I'm going to have a standard setting. Okay. So I'm going to have a standard settings. So on a standard setting that you want to find a proper entry for your trade on your Fibonacci retracement, it's usually, right? It's usually at least three things are very important. There are things that make your Fibonacci retracement stronger. First, we talk about liquidity. Second, we talked about imbalance, and then trend. So if the market is trending, it makes sense. It will be valid. Market trend, is it trending? Number one, liquidity area, and then an imbalance. What do we mean by liquidity? Now, look at this retracement you mark. This is a liquidity. So it sweep liquidity over into an imbalance. Look at an imbalance here, from here to here, a very bogus imbalance. Look at it here. From here to here is an imbalance. So when we have a wide imbalance, we structure it into a premium and discount level of entry. Look at it down here to this point. So now we have fib, we have fib level, and we have so okay, with that fib level, this is what lovely happened. And then I think I have a confluence, or what do we call it? An interception. So let me not go deeper. So let's just go straight, because this is a beginner class, and then to make it very sharp. Here we have the golden zone that is being referred to. I always tell people, some set their trade as a limit order. I don't do that. I wait for the market to come there. Now, here was a key level resistance, which market actually tap into. That's not the issue. Now, the issue is this. I'm able to see that this is the golden ratio. What happened? Even on that 4 hours, I don't need Jupiter to give me any excuse whatsoever. What happened here was what happened here. See, what happened here was what happened here. What happened here? Power of three: accumulation, manipulation, and distribution. Entry was here. Now, the same thing on this guy: accumulation, manipulation, and distribution. So for anyone who understood that the market was a downtrend, at the close of this candle was supposed to be his entry, and the stop loss at the top of that week. Now, where's my take profit? Now, mostly you target 1:2 risk reward. The dimension at which I use my fib level, if you target 1:2 risk reward, that's going to be here. The dimension I use, you're supposed to target this low, which is going to be 1:3. Then I target here, the first one, that 1:4, and then another point here, that's 1:5. So that means the next bus stop for Bitcoin is $86,000 is the next bus stop for Bitcoin. Yes, you heard me right. $84, $85, $86,000 is the next bus stop for Bitcoin. But look at the beautiful entry you have been able to cap for yourself, and then you are just riding the market with rest of mind. Now, so this is the lovely thing. Now, if you're going to go to a lower time frame, maybe for sniper entry, it's not a bad deal. So, but you have marked this. So let's quickly now see this. All right. So let's go to perhaps 1 hour, but the best bet is to go to 15 minutes, even 5 minutes. So you have seen that what was playing out here. So if I go to 5 minutes or 15 minutes, perhaps 5 minutes or 15 minutes, or even 1 minute, inside this box, you've seen that the market play out because of this fair value gap and all of that. So what could play out? What are you looking for? Coming to 5 minutes, 3 minutes, 1 minute, I want to see a change of character. But of course, if you know what to do, you know that the market is a downtrend. So after coming here, so look at it. This is a high. So we have a break of structure here, but the market created a low here. Let's look at it quickly. The market created a low here. So what you expect is for the market to return back to the origin. So, but all of this actually played out in their own dimension. Then the market returned back up to this point. So perhaps if I go to 1 minute, maybe you could find a sniper entry. But sometimes when you know what you are looking for and it had come to your area of interest, you don't even need all of this most time, because sometimes the refinement may not give you what you are looking for. So let's quickly go. So here, what we have is simple here. So let's use this one. Excuse me. So this is a break of structure. So this is a break of structure on 1 minute. It has actually taken out, but extending to another point. So this is a break of structure in 1 minute. So you have a market structure shift here. So you have the origin over here. So the advantage of 1 minute, so origin here, and sometimes you want to see a fair value gap, which make more sense. Now, when the origin has tapped into here, so look at what has happened. You're able to look for an entry here, probably after this engulfing. Your stop loss will always take it to the high because you want to be protected. If you put it too short here, Bitcoin is highly volatile, it will take you out. So, but if you look at it, it's very, very more comfortable for you here. Then you are extending down. Since you know that it's a downtrend, if not, your first take profit, you see, your first take profit is here. That is 1:2 risk reward. Let's look at it. Okay, here. Then, of course, trending it down. I haven't known that you are in a downtrend. So let's turn to 5 minutes. So returning back to 5 minutes, you can see you're able to have a sniper entry. So let's go to 15 minutes. You understand? So going to 15 minutes, because if you waited for this, so let's look at it. You will have been doing this. This is market structure shift. So you will have been waiting to this point. Your entry will have been here, which is still okay. It's not too bad. It's still very, very good. That's the truth. It's still very, very good because this is market structure shift, returning back, and it gives us a very perfect entry model we use for our confirmation, which is this. And inside your fib retracement level. That makes sense. So it's not a bad deal. Then we'll have a break of structure. We are back to the origin again, another entry. Do you understand? You keep rallying this same trade and then extending down. Even if you don't know where you are going to, you know that you are going to this low here. So if you look at your market, that means you are doing, at this point, when the market delivers to that your point, it's going to be doing 1:10 risk reward. Oh, you heard me right. You're going to be doing 1:10 risk reward. That's one of the massive stuff about trading. And that's the advantage of staying on a course. And what do I mean by stay on a course? Staying on a trade, staying on a particular market. So your entry, oh my word, this is amazing entry. Do you see this? Have you seen the difference? We enter at the neck. Can you imagine? So your entry will have been here, but my own entry is here. That's the essence of refinement. That's the essence of refinement. I'm going to be doing 1:10 risk reward. Probably you will be able to do maybe 1:5 or 1:4 as it were. So, ladies and gentlemen, this is how it is. And so the market, remember, and if you are the type that enter 1 or 2, 3 positions, where are we going to? Look at it. Let's go on daily time frame now. You're going to be surprised at what you will see. So you're going to be surprised at what you will see. So that means, how do you manage enter at that point? So remember I told you about where we're going to. Okay, so imagine targeting 73,000 from that your point here. That will give you 1:47 risk reward. Yes, that's how people trade. That's what we mean by people who trade with proper information and alignment. So what happened to people who have been in this trade here? I remember when I was telling people about here and all of that. So that's what it is, ladies and gentlemen. And I'm sure you have learned something. You want to be part of us on Plan B Express? You can go to the comment section. There's a link there. Join the forum. And then you can chat up with me on my phone number +234 970 90470. Take the number again, +234 90470 44998. I take the number again, +234 90470 44998. So WhatsApp me, I'll give a response on how to go about coming into our community. We have a lot of things to maximize in our ecosystem. And of course, it takes you little or nothing as what you should pay to be part of the community. Now, you want to know the next line of action where we come to this point. That's why you need to join our group and let us build money-making machine together. My name again is Felix. I'm the team leader of Plan B Express. You have a nice time. Bye-bye.